Consider the year 1970. You enjoy having a nice glass of Coca-Cola with your dinner every night after a long day at work. You received a big $500 bonus from work that holiday season and choose to put it all into your favorite soda firm. You had no idea that investment would one day turn you into a millionaire. Hey, welcome to Stock Market Mate. Today we'll explain why Coca-Cola stock has been a very strong stock for most investors. We'll also show examples of Coca-Cola millionaires in the real world and forecast what future returns you can anticipate. If you like the video, please give us a thumbs up and subscribe to the channel. Also hit that notification bell to get our latest videos and updates on our channel. Dividends have a tremendous compounding effect when reinvested over a lengthy period of time. The ideal place to do this are in businesses like Coca-Cola that have enduring competitive advantages. The Coca-Cola Company. The Coca-Cola Company, which was founded in 1892, developed one of history's most recognizable brands. In 1919, Coca-Cola went public and was denoted by the ticker KO on the New York Stock Exchange. It would now be worth almost $10 million if you had bought it just one share of the stock at its IPO for $40 and reinvested all the dividends. You did not need to reinvest that early though to get a sizable return. Let's revisit the scenario from 1970 that we already mentioned. You buy Coca-Cola with your entire $500 bonus. That investment would have a value of almost $1.3 million by 2020, yielding a 16.68% yearly return. The explanation below includes a link to the webpage that was used for that computation. In order to compute the overall return, dividends are assumed to be reinvested. This dividend reinvestment strategy is what accounts for the lion's share of this return. This is justified by the fact that your dividend is used to purchase further shares of the company's stock. This raises your next dividend payment, which raises the number of shares you may purchase after that, raising your dividends even further and starting a snowball effect that builds up over time. Additionally, as long as the business keeps increasing its profits, the dividend payout will grow over time. Quincy, Florida. For instance, the Coca-Cola Company has had dividend growth for 58 years running. Therefore, the fictitious investment from 1970 might have made you a millionaire, but there are several instances of actual people who have had their life changed by Coca-Cola stock. In Florida, the town of Quincy, this is perhaps best demonstrated. The story begins during the Great Depression with Mark Welch Monroe, a local banker. He made the insightful remark that despite extreme poverty or precarious financial circumstances, people would always spend their last nickel on a glass of Coca-Cola. He acted quickly to purchase shares in response to this fact. He would advise customers who came into his bank for a loan to take out additional funds so they could invest in stocks. Over time, he persuaded other local farmers, grocery store owners, and educators to make investments in the Coca-Cola Company. Most significantly, he advised them to hold despite any short-term changes in the market. The outcomes were astounding. In the end, Quincy emerged as the richest community in terms of per capita wealth in the United States. Of the town's original 4,000 residents, it is thought that at least 67 accumulated significant fortunes and became Coca-Cola millionaires. Their generational wealth altered the trajectory of their life and that of their families. This wealth's ripple effect benefited the town as well. The Coca-Cola payouts kept the local economy afloat during hard times, helping Quincy survive both the Great Depression and each subsequent recession. To put things in context, one Coca-Cola share from Monroe's time pays around $270,000 in dividends a year and is worth over $10 million after dividends have been reinvested. Many of these buyers had purchased many more shares than just one. If dividends were reinvested, 100 shares would be worth more than $1 billion. That is just amazing. Warren Buffett, investing in Coca-Cola. Warren Buffett is possibly the most well-known investor in Coca-Cola. Even though he arrived at the party much later than the town of Quincy, he still received amazing returns. He assumed his role in 1988 after investing $1 billion in 6.2% of the business. Over the years, he continued to add to it, but he decided not to reinvest dividends. He's one of the best investors ever, therefore by selecting his own stocks, he can increase the value of the investment more quickly. Buffett will hold 9.3% of the company in 2020, which will be valued at close to $22 billion. He will receive dividend income from that investment totaling more than $656 million this year. With a current dividend yield on cost of 50.5%, Buffett has an initial cost basis of $3.245 per share. This indicates that he is increasing his initial investment through dividends alone by more than doubling it every 2 years. A Coca-Cola Company share will never be sold, according to Warren Buffett. These investment examples show the value of making long-term investments in businesses with significant competitive advantages. Returns you can expect from investing in Coca-Cola. But what type of profit can you currently expect from Coca-Cola? First, let's build a model to predict future performance to find out. We used the stock's historical data and projected it ahead over a 35-year period to create this model. Therefore, we used the dividend's 5.57% compound annual growth rate for the previous 5 years. Additionally, the stock's price compound annual growth rate was calculated using data from the previous 10 years, which was conservatively estimated to be around 5%. The strategy is predicated on the idea that the business will expand at a comparable rate to prior periods. The current stock price and dividend payment must also be entered. Let's now examine the performance of a $1,000 one-time investment over a 35-year period. We end up with a total value of $5,662.65 when we don't reinvest dividends, and $16,835.42 when we do. This huge discrepancy of $11,172.77 is significant. It should be emphasized that even if the overall value is somewhat smaller, you would still receive the full $3,012.27 in dividend payouts. Therefore, when you don't reinvest the dividends, you actually earned $8,674.92, which is still far less than the nearly $17,000 you would have in value if you did. This illustrates the dividends reinvestment post-snowball effect that we previously discussed. With reinvestment after 35 years, you would get a dividend equal to 54.64% of your initial investment. Therefore, increasing your investment will increase your overall return while maintaining the same percentage return. Imagine you wanted to implement a more thorough plan and dollar cost average of $100 every month into Coca-Cola. With a reinvestment, after 35 years, your total value would be $237,751.16 and your yearly income would be $7,696.50, representing an 18.41% yield on cost. All of this is based on a total investment of $41,800. Again, if you increase the money amount, the percentage return will remain the same. If you put aside $500 each month, your total investment would be $1.18 million, making you a Coca-Cola millionaire as well. It's crucial to note that this projection is based on past performance and will undoubtedly vary greatly under actual circumstances. Coca-Cola can give you steady and increasing cash flow, but is unlikely to offer the profits of earlier decades. Additionally, if the video game Fallout is any indicator, bottle caps might replace coins as the currency of the post-apocalyptic world. If you're interested in learning more about the Coca-Cola company, check out our comprehensive stock review, which we'll link in the description. Please bear with us with the quality. That was only our 4th video on the channel when we had a whopping 20 subscribers. Be sure to let us know in the comments if you'd like to see an updated review of the company's shares. That's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!